KPLC made a profit, actually not a profit, but a net profit of 24 billion. And guess what? They're about to share the dividend. So if you're seated there and you're a KPLC shareholder, how many long months to come? They said they're going to share their dividends coming on January 2026. And guess what? For those who are the shareholders of that particular company, after KPLC giving us quite of a good capital gain is a sense where you buy shares at a certain price, then they increase. We had more than 10, actually not even 10x, we had like 30, not even like actually, we had like 13x of the whatever you had invested there as far as that particular company is concerned. And they have actually declared that they're going to share dividends after they've made a profit of such an equivalent. And guess what? This, by the way, if you compare, where's my pen? If you compare what they shared last year, they shared, there's something called EPS or earning per share, meaning how much they will pay per every share that you own of that particular company. And here is, last year, they paid an equivalent of 0.7 or 70 cents, almost 1 shilling per every share that you had. So it is simply 0.7 times whatever the number of shares you have, the number of shares that you have or had by that particular time. Now, this figure has actually increased. Now, they paid 2 times in terms of dividends. There's what we call the interim dividends. The interim dividends, they paid some months ago, and they paid 20 cents. Now, the end year dividends, or final year dividends, or whatever you're going to call them, they are paying 0.8. That is close to a shilling. So if you do a total of 0.2 plus 0.8, that is an equivalent that is an equivalent of a shilling. By the way, that figure is almost to that what the Safaricom has been paying for its own dividends. Bearing in mind that KPLC, people were in drought of dividends. I think it was, I stand corrected, you can check this on your internet, yeah? I think it was like close to 9 years, there were no dividends being paid, there was nothing going on or something like that. Again, I said that information might be wrong. Kindly check it out to verify what I've just said. I said anybody can be prone to error. That one I didn't check. But I knew they were not paying dividends for quite a long time. Actually, if you are a Kenyan, you will tell this, that this company has been making profit or other losses. You know, sometimes back people are even complaining, why are they making losses? And yet we never, you know, we pay our electricity in cash and what have you. So why would they be making losses and what have you? So they were actually on what you call the dividend drought. But now they are not only gaining, or people who are owning these shares, they are not only gaining on capital gain, but also we are experiencing the dividends being paid out. And an equivalent of 24 billion in terms of profit, sure, if you compare the last year, they made a little bit higher than this. There was some sort of, let me actually read you some article here. I hope I'm going to summarize it to the most important part. Now, what happens is that the profitability, there was a despite dip. There was a dip from the last year. They made around to 30.8 billion recorded, and they attributed this to the fluctuations of the currencies and what have you. But they noted that the operating expenses decreased by 3.86 billion, mainly due to lower expected credit losses. We call it the ECL, and provisioning under the, well, I'm not going to read all that. That is quite a lot of information. I'm simply reading some of the parts that are quite important that you can actually note out there. With this result, 25 billion for the KPLC is inevitable. The statement, what? Now, the profit before tax closed at 35.38 billion. That is what they made as a gross profit, that 35.38 billion. That's what they made. Then, well, once you do all the deductions of the cost of operations and all those expenses and what have you, then that is where they are left now with the 24 billion. That is ought to be a fraction of it. They didn't say exactly how much will be shared, but obviously, you know, a company is no-brainer, ought to have a certain amount of money on their reserves. Now, compared to the 43.67 billion which they have made some in the previous year, which is the year 2024. Now, what happens is that, yes, there was a dip of close to like 8 billion on such kind of thing, okay? Although they attributed the foreign exchange, whatever, and what have you. Anyway, that is it, guys. So, the KPLC will actually share that particular dividend to the shareholders. Actually, here it says Shareholders happy as company announces dividends after 14 billion, 24 billion profit rather. That was actually some sort of back then information. Now, here we are. You might be there, you're wondering now, wow, that sounds so good. But then, Joseph, how does one buy shares? I don't know how to go about it. Would you mind to educate us? I've been talking about stocks like forever, telling you guys you should invest and what have you. Okay. But now, sure, some of you may argue from, hey, 1 shilling per share isn't that good. True, it isn't that good unless you own a huge chunk of stocks of that particular company. If then that is not the case, for example, let's say you own, for example, 20,000 shares. 20,000 shares. That means it's 20,000 multiplied by 1 shilling, meaning you'll get 20. By the way, let me help you calculate what you'll actually earn if you own shares of this company. Let's say, for example, as we are speaking right now, you have an equivalent of 1,000 shares of KPLC. 1,000 shares. 1,000 shares of KPLC. How much will it cost you to buy? If say you are buying right now, 1,000 of shares, one share is around 13.5 shillings. Okay, 13.5 shillings. That means it is 13.5 multiplied by 1,000, which is equivalent to, for those who are good at mathematics, 13.5 3, so it will be 13,500. That's 13,500. That's what you need to have for you to buy 1,000 shares of KPLC. So let's say you had bought these shares before the book closure, and you say you bought it at that particular price, and you already have 1,000 shares. So if you have a 1K shares, therefore it will be 1,000 shares that you own times or multiplied by one share. You are getting 1 shilling. When we say EPS, earning per share, meaning one earning or earning per every share that you hold. Therefore, it is 1,000 multiplied by 1 shilling, which is equivalent to 1,000. Therefore, it means that you will get a dividend equivalent to 1,000. But remember one thing, the taxes must apply. Taxes in Kenya when it comes to stock market is around 5%, not actually around, it's actually 5%. So this 1,000, you deduct the 5% out of it. So you find the 95% of this. The 10% of 1,000 is around 100. So that's around 50. So therefore, approximately, you're going to get 950 shilling as your dividend. Truly speaking, that is not a good money. That's for sure. Most of you be like, okay, is it worth waiting a whole year to get 950 shilling? I mean, is it really worth? Whew, it depends on whom you ask. By the way, it's far much better than having zero at the end of the year, isn't it? But now, what happens, some of these shares, if you ask me, I really usually view them two ways. Either you have a huge chunk of shares. For example, let's say probably 60,000 could have made sense to you. Then focus on buying 60,000 shares of this company, assuming that they pay a dividends equivalent to 1 shilling per every share. So you focus on buying that. Therefore, when you start buying shares, some of you watching this video, you already have like 500 shares or maybe like 100 shares or something like that. May not really make quite of a good difference. So therefore, this is not the time to actually check out and be like, you know what, I'm earning dividends on. This is the time to fatten your cow. Keep on pumping in some cash, keep on pumping in some cash with a target in mind. Let's say, for example, you would feel okay if maybe you are earning, say, 1,000 or rather 60,000, you know, as a dividends. Then focus on working towards acquiring an equivalent of that number of shares. That is one option. The other option is to simply go ahead and view shares of KPLC and others that I'm going to mention later, more of a capital gain target than it is on dividends. Are we together? What do I mean by this? There's some of the shares, and that is my own analysis. And again, everyone, they buy their shares based on their own analysis. For my own analysis, there's some of the companies I don't really view them for dividends. Like 1 shilling, 1 shilling per share, that is quite low if you ask me. But I would buy these shares based on the capital gain. I told you guys I bought these shares when they were at around 1.546 shillings, around there. Now they're at 13, meaning literally what I had bought with has been 13 times. Okay, therefore I tend to gravitate towards capital gain on this whatever stock market of these companies. But then if you compare it with some other companies such as Stanbic, EABL, East African breweries, that is, if you know, BAT and what have you, where you find like approximately the earning per share is like 30 shillings, 50 shillings, 40 shillings. That one you can actually go ahead and do what? Be able to buy shares on those for the purposes of dividends. For example, let's say you owned 1,000 shares of Stanbic Bank. 1,000 shares of Stanbic Bank, one share they were paying 34, therefore multiplied by 1,000, that is an equivalent of 34,000 shillings. Do the deduction, probably that will come to 32 around there. I didn't calculate, I'm just approximating 32,000. Quite decent, but again, be informed. Buying Stanbic Bank shares will cost you more than 13,000. It will actually cost you a bit higher depending on the amount you bought. Let's say you bought at 184 shilling as it is right now. Multiply by that by 184, 1,000 times 184, that's like 184,000 you needed to actually buy this year. So try to understand that there are some of the stocks that are meant for dividends and the some of the stocks that are not by default, by look of things, are meant for what? Are meant for a capital gain. So it is good when you understand that, so that you don't go buy shares and then some even companies don't even pay dividends, for your information. Yeah, you just go there for capital gain, and it is what it is. So therefore, if you're coming in as a retiree or somebody who want to buy shares, as much as you're going to speculate on the capital gain, it's also good. It's good to gravitate towards where you're getting quite of a good amount of money in terms of dividends. I always tell people, do the market analysis, find out how much that company is making in terms of profit, gross profit. Also consider checking out what is the net profit, and also consider how much they usually share to the investors, how much they pay, and how much that means in terms of the earning per share. Therefore, you can be able to tell, hey, this is a worth company buying, for the purposes of dividends. Okay, yeah, that was the information, guys. The KPLC, that is the shares, that's the dividends that they're gonna pay. In case you're there floating, you know nothing about getting into the stock market, well, that happens to be my number. You can shoot me a text on WhatsApp, and then we can have the discussion as far as the investments are concerned. This is Good Joseph at all the time. Make sure that you hit like button, make sure that you subscribe and leave a comment on the comment section. See you the next time.